Good afternoon, everyone, and it's great to have such a power-packed panel here to give us a perspective on all aspects of the budget this time around and its implications for industry. But let me start off with you, because there was, in fact, plenty of chatter around tourism this time. Do you feel the Finance Minister has actually listened to all the feedback, perhaps, that the industry gave her over the last couple of years?
Not really. I mean, they've reiterated that tourism is important, but I think this government is probably more focused on manufacturing right now as a source of employment. I live in hope, so maybe next year.
Okay, all right. Navneet, let me come to you in terms of, the market reaction and the kind of buzz we saw post-budget. Pre-budget, we heard that it was a non-event, but I think the fact that there were no negative surprises and the fact that she did actually give a boost to CAPEX positively surprised the street.
No, I think budget is for the Amrit Kal, next 25 years, so you should not evaluate based on the market reaction over the last couple of days. There are a variety of other variables that impact market. But I think looking at the budget, analyzing it, I will use three words: credible, continuity, and conviction. Credible in terms of budget math, continuity, whether in terms of enhancing the tax to GDP through simplification, digitalization, formalization of the economy, changing the expenditure more tilted towards CAPEX rather than revenue, using the DBT to make the best of the revenue expenditure, particularly subsidies, ease of doing business, ease of living, all of that is like continuity. And conviction, I would say that when the world is going through so many challenges, having a conviction that over the next 25 years, India has a real opportunity of becoming a large, developed $20 trillion economy. An important part of that is not only a size of the economy or the per capita GDP increase, but also can we create an example of becoming one of the most sustainable, equitable, inclusive society. I think that's where I would say the conviction. So full marks.
Kunal, let me come to you and your overall views on the budget this time.
Yeah, I think I'm usually asked about what do startups think about the budget. So I'll, I actually feel whenever I'm asked this question about what is the startups' view on the budget, I always say, look, we have to revisit our assessment of the terminology of startups, because the budget caters to all sectors of the economy, as do startups. So from whether it's infrastructure, financial services, fintech, or education, manufacturing, hospitality, startups transcend all these sectors. So I feel that in this budget, obviously they were conservative, given the market conditions globally, but at the same time, there's enough for growth also across sectors, whether it's agri-tech, manufacturing obviously got a lot of focus. So overall, I would say it was from the startup lens, it was all very positive.
Okay, so talking about growth, let me go back across to Parvesh and get a sense, because it's really your sector that saw the biggest boost. Were you happy with the budget this time around?
I think a lot of positives, a lot of capex allocation, long-term, lot of projects are being shown. But I think the bigger things, which to my mind is, I think the momentum of the last few years has been picked up. More has been added, and I think it actually bodes well for the future years, because I think they're going to add more and more money. So I think we are in a very, very good period as far as the infrastructure is concerned, whether renewables, whether it's rail, whether it's road, whether it's airports. There was a lot of it, and particularly green energy. So a lot about environment has been said. I only have a couple of small, if I have to figure out I have to say something which is not that great. I don't know why they had to touch the InvITs. They touched the InvITs, which I don't know why they had to touch the insurance. And I'm not sure the capex which has been allocated, there is a ready absorption capacity of that much of capex. So actually it's a bit of an over allocation of capex, but the enthusiasm is very nice.
That's an interesting point, and I'll come back to that. But Prashant, I heard you nodding on the piece on insurance. I think the market was wondering that too. Why touch it?
Yeah, it came as a negative surprise to all of us, because we were representing that insurance should have better carve-outs as far as tax is concerned. Over the years, we have seen that the use or usage of ATC has been going down for insurance, and that number has been flat for many years. But 1010D is something which is quite relevant, which means you get all your proceeds tax-free if you have bought a policy which has 10 times the sum assured. This time, there is a cap of up to 5 lakhs on traditional policies. It came in ULIP a couple of years ago for more than 250,000. This time, it was more than 5 lakhs. And that is something which has evoked a negative reaction from the industry, from share market. All the listed stocks are down anywhere between 10 to 15%. While on one side, there's a market reaction, but on the other side, I think insurance as a vehicle is one of the most trusted vehicles as far as savings in India is concerned. And because of our long-term nature, etc., all of us serve a lot to retired customers. So people who are buying, typically buying more than 5 lakhs policies are trying to save for their retirement period. And hence, a recommendation of this kind definitely has a bigger impact, which we are trying to see how to mitigate. At the same time, I think the government intent actually to tax wealthy people is quite well understood. But somebody who is able to afford 5 lakhs may not necessarily be wealthy. I mean, people who are earning more than around 30, 40 lakhs are not really particularly wealthy people. So our view is that that benefit should have continued. If we had to tax, maybe we could tax more than 10 lakhs, not 5 lakhs. Of course, as an industry, we'll represent and see which way it goes, but definitely a negative reaction.
All right. Rahul, coming to you. And I want to get your perspective on the entire angel tax issue, because that's much talked about in the startup ecosystem. There was a sense that perhaps if that could have been eased out, it might have been a little bit more of a fillip to the sector.
No, so the way I look at it, for startups, there are two things which are very important, right? Access to more money, and angels play a very important role in it. And over the last few years, we have talked about how do we get access to more domestic capital. And the second thing which I would also want to expand the question, which is on ESOP taxation at the point of exercise. So I think these two things, remain a recurring ask for last several years. We continue to hope that it will come in the budget hopefully very soon, or maybe as a separate topic, because these are two fundamental things of how do you create value for employees and investors, and how do you attract more and more people coming into the sector. However, I would say that I continue to remain excited about the fact that just few years back, startup was not part of the budget conversation. So the fact that startups are talked about in the budget conversation, the country is continuing to think about how can we have more startups, not just facilitated by the central actions, but also by states encouraging startups to come in, is a positive direction that I would believe.
She definitely did mention the word several times. Kunal, and also talked about, pockets, like you mentioned, fintech, and driving action in those segments in particular. Do you feel that perhaps the startup ecosystem would have wanted more of a fillip, or that just the fact that they're being recognized as such is a good start?
I think we are past the point of, while I agree with Rahul completely, when I started 15 years ago, startup was not even part of the parlance in India, where it was like either you got a job or you maybe started a company. What is this startup thing? But obviously now it's part of national parlance, and the smartest kids out of the best colleges want to start up, and they already start up when they are in college, compared to something which is, it's like something you would irregularly see in the world. I do feel that, while this recognition is great, we are past that point as an ecosystem now. I think we feel abundantly recognized. I think at this point in time, we are now part of the conversation in various industries, right? If agriculture is having a conversation about how to move that industry forward, startups are part of the table, where they are saying, here's how we are using technology to bridge the gap between demand and supply and make things more efficient. Same in financial services, same in manufacturing, so on and so forth. One area where I do think, which has been a constant ask from our industry, which impacts employees, investors, sentiment, flow of domestic capital into startups, is the equalization of the long-term capital gains tax on unlisted equities to listed equities. And today there is actually a benefit. If you invest as an overseas investor in an Indian company, you get a lower tax rate when you sell your shares in a startup versus if I invest in a company as an Indian resident in the same startup, which sounds a bit, inconsistent with what we would want to do as a country, where we would want to have the same level of tax so that there is no disincentive for domestic investors to invest in startups, which today, unfortunately, is the case.
Okay. All right, let me come back to the startup segment. But Patu, let me bring you in here. And while you said that perhaps she hasn't yet heard the industry's call, we've been seeing a fantastic set of numbers coming in across the board when it comes to tourism, hospitality. Right now, the economy is looking good. Do you expect that optimism to remain? Any sort of uncertainty or gray skies on the horizon? Or are you also confident, given what the finance minister also outlined and the kind of boost she's delivered in the budget, that things will remain on track?
See, our industry is in the discretionary sector, and I feel that other than some new black swan event, I see the next 4 to 5 years for the hotel industry as just an upswing. So, in this industry, in fact, in the tourism industry, I just see positive waves going forward. In the hotel industry, what I find interesting is that, I guess nobody is in the hotel industry except me. You make, in 10 years, you make 80%, it's Pareto, 80% of your profit in 2 years, which is the top of the cycle. So it's a bit like a commodity cycle. And that's come finally after 14 years, okay? So what I see happening is that every hotel company in India, so there's a saying, at the top of the cycle, gadhas and ghodas run at the same pace. So here, everybody will run. Of course, there will be differences, but my view is the next 3 years, and perhaps 4, till supply comes in, you are going to have a period where every hotel company in India is going to make a crazy amount of money.
Fantastic. And where do you see that growth coming from in terms of segments, or would it be across the board?
So here's the interesting thing. I find that, nobody in his right mind wants corporates as your customers because they buy large amounts of inventory and give you very low rate business. So what you really want is retail. One is it protects your brand, expands your brand, and it's very difficult to shift a retail customer, whereas a corporate can say tomorrow we've signed, a contract with somebody else. What's growing very fast? So if I break this sector, where does growth for the hotel industry come? It comes from the services sector. So if the GDP grows at 5%, but the services sector grows at 10%, and within that, say technology, financial services, and so on are growing at 12 or 15, the hotel industry grows at 1.5 times the services sector, okay? And now supply is going to grow at roughly 3 to 4% for the next 5 years. You can project that because supply takes 5 years to get ready. So what I see happening is there's a 15% demand growth, a 3% supply growth, 5% supply growth, and for every 2% difference in favor of demand, it's like the oil industry. A 1% increase in demand is a 10% increase in price. So if I project 1.5 years from now, the average cost of a hotel room will be double of what it is today. Wow. Okay, and that's operating leverage because there's no increase in cost. You'll see it from Q3, Q4 as companies report.
Okay, so I guess my next question then would be, Navneet, do you see spending power? Do you see that demand? Do you see all the factors in place for that kind of demand to match what Patu is saying?
Very clearly, I think over the last several years, we have seen a majorly consumption-led growth, but 1/3 of the economy, which is investment, and that you split between government capex, corporate capex, and household capex. Within that, government is surely leading from the front. The corporate capex, I think looking at the cleanup of the balance sheets over the last couple of years, now banking sector's balance sheet is in a great shape to lend money, and with capacity utilization increasing and the other opportunities coming from in a geopolitically realigning, in a demographically diverging, and a digitally redesigning in a decarbonizing and a deleveraging world. India is clearly an oasis of hope, and I'm sure we are going to see that. Household capex has been increasing, particularly on the real estate side. Maybe higher rates may dent some bit of it, but otherwise, structurally, I think we are moving in the right direction. When that happens, you have a more sustained increase in consumption. Because when investment cycle kicks in, you have new jobs getting created, incomes rising, people consume more, people save more. When people save more, it goes into investment, which in turn creates more capacity and more jobs. So I think we are likely to enter into that virtuous cycle after a very long time.
Okay, so let me ask you, Prashant, talking about savings, because there was also debate, it was playing out earlier, on one of the other panels and post-budget otherwise, in terms of whether or not this is going to result in less of a savings economy, or will it be savings of a different kind as the economy moves to different instruments?
I think from the vantage point of life insurance, where we see a lot of savings come through, I think post-demonetization, we saw formalization, which led to savings flow through to companies like us, of course, to mutual funds. And I can see across all financial services cohorts a steady increase in savings inflows. For example, COVID was a very difficult year, but our industry didn't stop. Actually, year on year, we have seen savings of or inflows, new premium of about 15 to 20% growth, which is one of the very robust growths that I've seen in over a very long period of time. So my sense is that as wealth permeates, people will spend, and I think people will continue to save also. And I think that means an overall growth for all the sectors of economy. From our perspective, I think life insurance as a category holds license to be in several zones. And you must have read quite a lot about life insurance over the last couple of quarters. We have a new chairman who is very visionary, has a vision of where life insurance industry should be in by 2047, which is 100 years of independence. And I think across not just savings, plain savings, but retirement saving, pure protection, reaching out to tier 2, tier 3 and village levels, I think there's a lot of work that needs to happen. And I think all that is definitely good news. And personally speaking, I feel very optimistic about which way savings in general and life insurance in particular is headed.
So a lot of this hinges on the capex push and the supply side measures that she's talked about. Pravesh, you talked about the absorption being perhaps a challenge. Would you like to elaborate a little bit more on that?
Yeah, I think before I go there, couple of other things I just want to add. What I find very redeeming is this long-term loan to states. 50-year loans, interest-free or low interest rate, because whatever development was to happen, which is led by the central government, were happening very well. States were not really picking up the wake what they're supposed to. They're supposed to be 50-50. It was becoming actually like almost 1:2.5. With this coming in, if the state come to the party, I think that will happen. There's one thing. Other one is the urban infra. We're not yet able to crack this threesome of center, state, and the municipal body, because of which there's a lot of gap at the urban infra level. On the absorption side, I think road sector can pick up all the funds it has. I find railways not yet shovel ready with the kind of money which has been given. Metro, yes, but Indian Railways per se, I mean, railway just came out of these high, operating ratios just like 2 or 3 years ago. For them to be absorbed, to be able to absorb 2 lakh plus crores in a year, one wonder how and when that's going to happen. So that's, I think, one part absorption there. But I think suffice is to say, a lot of funds are being done. But the last part, which is actually far more redeeming for me than anything else, I think the private sector capex is picking up. That has not happened very often. With the private sector capex now picking up, I think that is the actual boost which will happen now.
All right. I want to also touch upon digitization. Kunal, let me come to you on that, because a lot of talk about that, and the government also seems to be on a very firm path to ensure that they're also driving that, when it comes to systems and regulations and bringing the country online. We just want to get your thoughts on how you see this evolving over the next few years.
I personally think that we are living in such an exciting time in our country, because India at this point in time is arguably the most or one of the top 2 most digitized nations in the world. And that brings with it so many advantages, whether it is, and it plays a role in our daily lives now, right? From UPI and now with the new platform ONDC, which the government's launching for democratizing e-commerce, to the India Health Stack for democratization of healthcare services and access to them. The benefits of this will start becoming more and more. We are already seeing the benefits of digital transactions. We'll start seeing the benefits of ONDC in our day-to-day commerce or digital commerce. We'll start seeing the benefits of India Health Stack in our daily lives. You know, if anyone's used Digi Yatra, like everyone's been, there are the long lines and then there are the short lines of the people with the app, right? So we are seeing the benefits of digitization in our day-to-day lives now. And I feel this is a trend that will keep continuing even in this budget. The fact that PAN will be a single source of truth as an identifier, the stuff the government's doing around data embassies. There's just so many. There's an initiative after initiative after initiative allowing for digitization to seep deeper into our daily lives. And for the most part, it's a very positive thing because it brings more productivity, more efficiency, more democratization of services, right? Now, irrespective of where you are in the country and who you are, you will have access to most of these digital services everywhere. And the government continues to invest. I think the amazing thing in India is that on one hand, we obviously have to take care of the almost like 1 billion people who don't have access to all the resources many of us more fortunate have. But at the same time, in the quest to provide them the requisite welfare, they are not falling behind in modernizing the country. And not only modernizing, but staying at the global forefront of digitization. So it's obviously a very, very positive trend going forward.
I think it's an underappreciated fact. There is a saying you don't realize when you're part of history. Our transformation from the most data-poor society in the world to the most data-rich society in the world is so underappreciated. The reality hasn't sunk in what it has done and what it has the potential to do over the next several years.
Okay. Rahul, any closing comments before we wind up this conversation?
No, I think Kunal made a fantastic point. So we are probably going to become the, on population basis, we might be already the largest digital country. And we, as a government, as a private sector, have taken it up that this is the way the modern India will be created, using a digital-first approach. And I think it is super exciting next 10 years.
Fantastic. Gentlemen, thank you so much for your time. It was great to hear from all of you, expert perspective coming in from across industries and overwhelmingly positive with an eye to a future growth story that's going to propel India. Thanks so much. A big round of applause, please.